Hey everybody, welcome to Stock Markets with Bruce, my new stock market channel, Stock Markets in Plain English. Thank you for subscribing to this channel and also supporting it with PayPal donations. I really appreciate it, guys. We're not yet monetized. New York City, baby, here it is, the tip of Manhattan. What a neat place. You know what? If you can make it here, you can make it anywhere. And today, we got some news out of one of the analysts on Wall Street that caused the shares of cruise lines to take a bit of a pop today. As if they haven't had a good enough month already, there are actually analysts upping their price targets. But this one is a little different than normal price targets. I think what we have here is an upgrade in a price target with a sell single at the same time. It makes no sense, but then the market doesn't make sense either. I'm talking about the Bank of America. The analyst there was following the cruise stocks, and the analyst came out with a target price increase for this cruise line right here, Royal Caribbean. And this cruise line you see coming up here on the left, Norwegian. The price targets have been bumped up on the shares of both cruise lines, but the target prices are below where the stocks are actually trading. What the hell is going on? Let's take a look at the chart for Royal Caribbean. You'll take a look right now. This is the last 6 months. And you can see today it is at 84.74 in this neighborhood. It's been jumping around towards the end here, but another good day. An interesting 6 months from the 40s up to the high mid 80s now. The target's been raised to $60. So big deal. The target was 30, now it's 60, and it's an underperform rating. You know what that means? That's called sell. Get the heck out of Dodge. It's $26 overpriced. Here, the Bank of America target is $25 for Norwegian. Well, it's $25.67 a little while ago. That's a sell. I mean, it's already at the target price. You don't buy the stock at the target price to expect it to go higher. This analyst is saying over the next year, we think this is the fair price for the stock. If you own this stock, get out. Get out of there. As far as Carnival goes, today it was up a couple of bucks, $23.19. This company raised $1.5 billion at about $18.50 a share a month ago. The chairman of the board sold 5 million shares of his own holdings the other day to bring in $100 million. He's getting out, and the stock is now 23. What people are doing buying this stuff and holding it, I do not know, because you take a look at fundamentals like this lady is right here. There are no earnings. There are no expected earnings. They've just canceled cruises. All three of these cruise lines just this week postponed the startup of their cruise lines to at least next March 2021. That's another 4 months from now. And every month these guys are shut down is equal to $1.1 billion of money evaporating from their bank accounts. So they've just told us $4.4 billion more will be lost by these three companies between now and March 1. And I can tell you, folks, we're not cruising until we get a vaccine, and we're not going to get our vaccines until the summer or fall of 2021. And in effect, if we want to go on a cruise, we're looking at September, October, November next year. That's almost a year from now. And that means these cruise lines are going to lose another 5 months of money. And that's another $5.5 billion. So add it up, 5.5. That's about $10 billion more they're going to burn off before they bring their first dollar in the front door. Why are these shares at such lofty levels? Pure speculation and ignorance. People have no idea. These folks who are chasing this stock have no idea of the carnage that is going to befall the books of these cruise lines. They're not going to go under. They will raise the cash to stick around. But I'll tell you this, folks, 2 years from now, when they're maybe making the kind of money they used to make a year and a half ago, if they get to that point, it'll be a miracle. I don't know if they're going to even get to 65% of the kind of money they used to make because their operating costs have gone up with all those interest charges. But nonetheless, if they make the kind of money they used to make, you've got to divide the earnings, future earnings, into the number of shares that are outstanding for all three of these companies. And with all the shares being issued by the treasury of all three of these companies, they will have probably double the number of shares outstanding in the next 2 years than they had a year ago. So do the math. Royal Caribbean was at $135 a share for its all-time high when it was flying high with profits. You got double the number of shares outstanding. You're talking $62.50 for the same price point for the earnings per share. Carnival and Norwegian, they were in the mid-50s. They'll be lucky to hit $25 to $27 on net fundamental earnings if they make the kind of money they made in 2018 and 19. I don't expect them to make that kind of money at all. And so these three shares are way overvalued right now. They're likely to be worth about 40% of what they once were worth at their highs. And that spells trouble. And I'm talking between now and 2025. So anybody who wants to buy the stock today in 2020 thinking they're going to double their money, you got another thing coming. And they're not takeover targets. That's not going to happen. If anything, they're going to keep issuing stock from the treasury to raise cash, to hang around, and then start meeting interest payments and possible debt payoffs, because these guys have got tons of bonds out there, notes that they're on the hook for, and they're going to issue paper from the treasury to pay that off because they're not bringing in cash from investors or from sailors. Anyway, there you have it. Stock Markets with Bruce, another episode. Thanks for joining, and thank you for your support. Please subscribe today, and we'll talk to you later, everybody. Bye for now.